This is Adrian Manz. If you'd like to learn more about the strategy we'll be discussing today, you'll find all the details in my new book, Trade Secrets, Powerful Strategies for Volatile Markets. It's available with free shipping at TraderInsight.com and Amazon.com. You can also order from your local retailer. The best trader education anywhere, only from TraderInsight.com. For TraderInsight.com, I'm Adrian Manz, and this is another Trader Insight 2-minute strategy session. I get quite a few questions about handling trades and how do we manage all these positions once they're open. And part of what we do to make our life a little bit easier around here is automate things. As those of you on my trading service know, there's a rule book. It's actually very easy to follow once you start reading it, and it outlines exactly what it is that I want to do at every single price level that's achieved as a trade moves along. So in the case of Ann Taylor stores here, we see this green line on the chart. That is indicative of the entry point. The two orange lines on either side of that, this one has a pivot over it, but it's orange underneath there, are 10 cents around the entry point. So if we get 10 cents against us before we go 10 cents in our favor, of course we scratch the trade, look for another entry. But the yellow line down at 27.92 represents 50% of the distance to the profit target, which is this blue line. And what we want to do at that point is change our trailing stop from the red line, which is 28.62, which was the stop loss on this trade. And we want to go ahead and change the trailing stop to break even. Now, how do we accomplish all this, right? Because we don't want to only put in a stop loss. We want to also have the opportunity to go to the profit target, of course. And in Realtic, what I do is use what's called a conditional order. And in this case, it's a very special kind of conditional order called an OCO, order cancels order. What we would do is say, for the stop, buy, and then our quantity, day, partial, you're going to set up your margin and volume types the way that you normally would. Buy at a stop price of 28.16, which was the entry price, and say our limit price is going to be $28.26. Now what that does is gives me what's called a marketable limit order. If my stop price of 28.16 gets hit, I'll take any price between there, which is break even, and $28.26 on the fill. This thing is liquid enough that I really don't have to worry about getting filled. It's gonna get me pretty close to that 28.16 stop. And in a down market where there's a profit, if I hit 27.68, which is my profit target, I am going to exit the trade with a 10 cents trailing stop. So as soon as I get to this profit objective, it's going to start trailing a stop 10 cents behind me. So it'll trail at 27.58, and then as we progressively move lower, I would have 27.68, 27.58, 27.48, and so on until finally the stock would turn around and stop me out. And that is all that's to it. We tell it to place our orders, and we are good to go. So for TraderInsight.com, that's your 2-minute strategy session on how to use order cancel order conditional orders.